Hi there, and welcome to another edition of Resources Plugged In, the podcast at the intersection of mining and finance. I'm your host, Keir Reynolds, and today we're lucky enough to have Srini Godavarthy with Li-Metal Corp here with us today. A little bit of a different episode here. Rather than talking sort of pure sort of exploration, we're going to go a little bit up the value chain. Srini, how you doing today?
Doing good. Thanks for having me on the episode.
Hey, thank you. Really excited to sort of dig in, obviously, with your background in lithium and battery technology, which is there's a lot of discussion sort of going on these days. So really interested to unpack this sort of theme with you. Before we sort of dive into that, maybe you could kind of explain to our viewers a little bit about who you are, your background, your education, stuff like that.
Sure. Education-wise, I have a PhD in chemical engineering, so a technical degree, and then midway through my career, went and got myself an MBA because business became more interesting for me at the midpoint, right? From a journey on the commercial front, I actually have a equally split career between oil and gas, and then became a renewable energy convert in 2014 when I joined Albermarle. The battery technology was just starting to kick off at that point of time. And then for 7 years at Albemarle, we enjoyed a great run-up in demand for lithium, which continues even today. Now I am the CEO, as you said, of a company called Li-Metal, which focuses predominantly on developing lithium metal and lithium metal anodes, servicing the next generation of lithium-ion batteries.
Excellent. Well, I look forward to unpacking that with you and understanding a bit about what Li-Metals does. So maybe you could explain a little bit about your time with Albermarle. You sort of manage commercial product and technology development. Maybe you could sort of, whatever you're allowed to talk about, no trade secrets, but maybe you could just kind of talk about your experience.
Yeah, big picture, right? I mean, not going into the details. I joined Albemarle right at their acquisition of Rockwood, which was the lithium business that they acquired in 2014. The board of directors decided they really needed to understand the lithium value chain. So they, exactly like your viewers, were thinking, hey, do we play in the lithium space? Do we go further downstream in the value chain? Do we become a cathode player? Do we become a battery player? Where is the value in this industry? Where should we play, right? What happened was we formed a data science team. We really looked at all of the profitability across the value chain. We looked at the mining portfolio and then came to the conclusion, actually, that mining was the best bet for Albemarle because across the battery value chain, as you go further downstream, the profitability tends to drop, with the OEM having the least profitability and the miners having the most profitability, right? So Albemarle and the board made a decision to stay in mining, and that's where they are even today. But what they did was they said, look, to be in mining, we should own the best resource and the best process technology. So I built out a team to look at all of these resources around the world, which ones we should acquire. We also had a process demonstration team, which looked at all the exploration technologies, what we famously call DLE today, and then pairing those resources, acquiring those resources, and then partnering with these technology companies to extract lithium in the most cost-effective way. Last couple of years of my career was, once this was done, I moved over to the commercial side and started looking at the next generation of batteries, how lithium will get used in those. And that is where I started working with lithium metal, lithium salts, which would be used to make the lithium metal. And then we used to make anodes by extrusion, right? Which is one more technique that's available, but it ends up in thick metal foils. But given the resource intensity, the thinner foils are preferred. So when this Li-Metal approached me with, hey, we have this technology, alternate technology to make lithium metal, which is more environmentally friendly. And we have this vapor deposition technology, which can make the thin foils. It was really attractive for me. And I had to jump and take the CEO role with the company.
Excellent. Well, that's a great segue for us to talk a bit more specifically about Li-Metal Corp and sort of what it specifically does. So you've kind of talked a bit about thin foil sort of technology. Can you explain a bit about it? It's not an exploration company. It's a technology. I think it produces, and you have a pilot plant, if I'm not mistaken. Maybe you could give us an overview on Li-Metal.
Right. So let's talk about what is next generation battery technology first, right? Today, lithium ion battery technology has a cathode, which is where most of the lithium sits. You have a lot of terminology, NMC, NCA. All it is there are two cages in the battery, and lithium is your workhorse, which is going from one cage to the other cage, right? The way they introduce lithium is through the cathode cage, and the anode cage is carbon, which is graphite. The graphite is actually a poor cage in a sense. It does not perform as effectively. The energy density that it offers is low. So next generation battery players are all looking to replace that graphite with either silicon or lithium metal. Whichever you replace, whether you replace with silicon or lithium metal, you get about 10 times the energy density boost on the anode. So effectively at a battery level, you can double the energy density, which means in simple terms, the car will go twice as much on a single charge, right? So the range of your vehicle really gets a boost. Or new areas of application such as aviation, whether it's drones or now the popular e-taxis that people are talking about, can all be enabled with these next generation battery technology. Our role in this is making those anodes, and to make those anodes, you need the metal to make those thin anodes. So what we are working with is the miners that you normally talk about, take their product, finished product, their lithium carbonate, convert that into lithium metal, and then take the lithium metal further and produce these ultra thin anodes, which are very cost effective for our customers to use in next generation batteries.
So basically, you're telling us we probably need to look elsewhere other than graphite. Maybe investing in graphite production and exploration might not be the way to go for next-gen batteries.
For next-gen batteries, that is true, but graphite is still going to be important, right? Let's be honest. Next-gen batteries will not replace graphite in the short term.
Right.
The battery industry itself is today about 1 terawatt of capacity, and it's supposed to increase to about 4 terawatts over the next 7 years, right? So the next decade, you have a quadrupling of this. So even if next-gen battery technology comes in and takes a large market share, the demand for graphite is still going to increase, even as its market share drops, right? So graphite is important, and the exploration is important because you saw what China did, right? China basically cut your graphite availability off, which means you need the exploration companies outside of China to come up with new resources for sure. So don't go all the way and not bet on graphite.
Sure.
But at the same time, if you're somebody looking for an exponential growth, graphite is going to grow, don't get me wrong. But if you're one of your listeners is interested in an exponential growth, they really need to look at next generation batteries because they are so small today, and the pace at which they're going to increase is substantial, right?
Right. That was going to be.
Just one last thought. The way I compare, next generation batteries is where lithium ion batteries was in 2010, 2011. Right? You can imagine the rapid growth of that. That is what next generation batteries is going to see.
I was going to ask sort of what sort of percentage market share currently is next generation, and also maybe if you could define what next generation batteries sort of are and where their applications would be used today.
Sure. Look, the total next out of the 1 terawatt, right, which is 1,000 gigawatts of production for lithium ion batteries, maybe 10 to 15 gigawatts is next generation batteries. Extremely, extremely small. That's why I say they are at their inception, ready to go into scale up mode in the next 3-4 years. So that is why when I mean exponential growth in this industry, they are right at that inception, right? It is getting to be real, and it's taken a long time for these batteries to come through, right? But lithium ion battery took 30 years to get to main stage as well. Where will these next ion batteries be used? The leading users or the leading developers are all the aviation industry, right? Whether it is Amazon trying to deliver these packages or people trying to do military applications, right? Drones, aviation applications on small taxis, which are vertical takeoff. These are called eVTOLs. Which can basically move you from one point to other point in New York, to avoid congestion. Those are the kind of the leading drivers for this. But eventually, once that development is done, EVs are right behind, right? EVs is where this really gets to mass adoption. Once it's in your EVs, then the volumes are going to raise substantially.
Right. And in terms of next generation, what sort of classifies, is that something like solid state that we hear a lot about? Is it related to its energy density, its potential ranges? Maybe you could just talk a bit about what sort of classifies it as next generation.
One, it is the energy density. That's the main one, right? But what I would like to educate your listeners on is all of this next generation has often been tied to solid state batteries. And what we are seeing over the past 6 months, at least for us and our customers, is they have managed to replace the traditional solvents that are used in lithium ion batteries, which are called carbonate solvents, with ionic liquids or other type of solvents, which are very compatible with metal anodes. And that is what's really accelerated this. So if you look at the general publications, they all talk about solid state batteries coming in 2030 or later, right? But what's happened is there are several companies which have revolutionized that, where they've done some incremental innovation in the electrolyte. They've pulled out the carbonate solvents, which are not compatible with the metal, and put in a different type of solvents. And now all of a sudden, they're talking about 26, 27 scale up, right? So they've managed to pull that demand forward by 3 to 4 years with one small tweak. So I would encourage your listeners to investigate, look into that more, and learn about and differentiate, right? Not go with this hype of, hey, solid state is synonymous with metal anodes. What we are seeing is now even the liquid electrolytes are synonymous with metal, can use metal anodes, right? That is one key point. The other thing about next generation batteries is the safety. The carbonate electrolytes are the ones which are very flammable. Those are the ones which start the fire in the battery, and then the lithium catches fire. By replacing the carbonate electrolyte out, you're managing to enhance the safety of your lithium ion batteries substantially, right? So two key drivers: energy density, safety, and then the last one is cost, right? They really want to drive this cost of the next generation batteries below $100 a kilowatt hour, so that mass adoption can happen. So those are the three key facts.
Maybe just on another topic, and again, I'm a little bit of a layman, you're an expert, so thank you for blessing us with knowledge here. But we're hearing a little bit about this term like LFP, or I guess like a lithium iron, like a phosphate sort of iron kind of battery. Can you talk anything about that sort of platform?
Sure.
And is that considered next generation, or is that considered lower cost, lower density?
Exactly. So there are two pathways that the current lithium ion batteries are evolving in, right? One is called the high energy pathway, where you hear terms like NMC and NCA. NMC stands for nickel, manganese, cobalt, right? Those are what are in the cage. And then you will see numbers behind it, right? 622, 53. All these numbers mean there's 50% nickel, 60% nickel, or 80% nickel in the battery. With what they're trying to do is cobalt is the most expensive component of the battery, and they're trying to reduce the cobalt and it boosts the energy density, right? LFP is the other pathway, which is the lower cost pathway. Because you have no nickel, no manganese, no cobalt. All you have is iron phosphate and lithium. And so it is cheaper to make those than NMC, right? So that is the low cost, but it comes with the disadvantage that there is low energy density, so lower range of your vehicle. But there is also a tweak to this, that there are few cathode innovators who have come up with something called LMFP, lithium manganese iron phosphate, which actually can compete very well with the NMC, but at a lower cost, right? So there's all this innovation happening on the cathode side, but those are not considered next generation. When there is innovation happening on the electrolyte or anode side, those are considered really next generation of batteries, because they boost your energy density from today around 200 to 240 watt per kg to over 400 to 450, or even in some cases 600 watt per kg.
Yeah, so if we're ever going to see EV technology in like airplanes, I guess they need massive energy density just to compete with gravity and
exactly 450, right? 450 watt hour is the minimum on a weight basis, which is called gravimetric energy density, and then 1,000 on a volumetric energy density basis is the minimum to really get to that next stage. That is why metal anodes play such an important role, because today when you use graphite, it takes up a lot of weight and takes up a lot of volume, right? By going to metal, you basically drop a substantial portion of the volume of your battery out, because it's 10 times the energy density, right? So you're 1/10 the utilization of volume, and It's a lot lower weight. So you can really drive those two, and that is the motivation for next generation batteries.
And so Li-Metal is focused on next generation battery sort of technology. I mean, is that correct? And can you discuss some of the advantages that your products, have over others that might be in the marketplace?
Sure. Look, our main focus is the entire supply chain, right? Because if you look at it, how the company got started, right? The traditional process to make metal, which is our feed to our starting point, right? 90% of it today sits in China and Russia. And with the geopolitics, if you try to scale this up, and then if China does the same thing, that they cut the metal supply out, then all of this technology is in a bind, right? So one, we were very clear upfront that we wanted an independent metal source. We don't mind using the short-term metal from China, but longer term, we wanted an independent source for the metal. So we needed a process by which we could make the metal. The traditional way that the metal is produced is using something called lithium chloride. That lithium chloride is in limited supply, right? There's no capacity built out for the lithium chloride. A majority of the lithium chloride comes back as a byproduct from lithium chemical production. To go scale this for millions of EVs, you have to make it on purpose, which will make it very expensive, right? So we wanted to focus on a low-cost supply chain that would be compliant with IRA and some of the other European requirements, that the material be locally produced. And so we built out a process. We started looking at that lithium chloride process. We quickly realized you cannot do it because there's not enough lithium chloride. So we have developed a patented process that takes lithium carbonate all the way directly to lithium chloride. So we avoid a lot of the intermediate steps that most of the producers today go through, and go straight from carbonate to metal. The other thing we avoid is the process today. When you make lithium metal, you generate about 5 tons of chlorine gas for every ton of lithium metal, right? In China, they deal with it the Chinese way. in the Western world, you will never get permitted for a plant that produces that much chlorine gas, right? Especially if you do not have an outlet for the chlorine gas, it gets very expensive, right? Which limits where you can set up such a plant. You might be able to do it in certain chemical hubs where they use the chlorine gas. But if you're trying to build in upstate New York or California and San Francisco, where all of these battery factories are being built, you will never get the permit for one of these, right? So our thought was, hey, we wanted a clean, environmentally friendly process, and we plan to establish this. As you mentioned early on, we have a pilot that's operating in Toronto.
Very cool. Now, in terms of your process, you're going to need some raw material. Where would you be getting your raw materials in order to actually produce your metal?
Exactly. So our raw material for this process is lithium carbonate. So we are in conversation with most of the lithium miners to see who can supply us the carbonate, if they would like to come partner with us to become a player in the scale up. So we are also in conversations with the Quebec government, Department of Energy, because they are all interested in having a Western centric supply chain for metal. So we are having these conversations. It's a bit early for us. We are looking at a plant coming online in 26, 27, because that is when the demand starts to take off. And we do not want to build ahead of the capacity, right? Because then prices drop and you cannot get your investment economics back. So our plan is to come online in late 26, early 27, depending on the market and the demand for it. And so we are having preliminary conversations at this point of time. Our focus right now is the Canadian government is funding the development of this effort in terms of whatever technology, right? We have a pilot that's operating. We are nailing down all of the process conditions, economics, and optimizing those so that we have done our phase one engineering study, what you could call as the preliminary engineering studies, right? But we have to finish these pilot work, and by late 25, early 26, expect to have our bankable feasibility study done for the metal plant. And then late 25 would be when we will be locking up our partnerships for the supply of carbonate, and to see if one of these majors wants to step in and become a partner on the metal production.
Hey, excellent. Thanks. You kind of covered off a few other questions I was going to ask. That's a great explanation, and thanks for going into the detail. Maybe we could talk just a little bit about, I guess from an investor standpoint, like right now, trying to understand what phase we're in the lithium market. Lithium's been obviously a very strong, interesting place to be, for years. And if I look at my own portfolio, I've had a pretty high percentage of chance where success rate where an explorer has turned into a developer or been acquired by somebody who's going to develop their asset. I guess I would argue that from my standpoint, I've had a much higher success rate at investing in exploration that's turned into an exit, a successful exit. Does that mean that lithium is found in great quantities and is a little easier to put into production than say maybe some of the other metals like gold or silver or copper, things like that from an economic standpoint? But I guess rather than ask you an expertise on that specifically would be, are we thinking there's still going to be a big lack of supply of lithium, or what's the supply and demand curve kind of looking like with all this new on stream of production?
Very good questions, right? Lithium market will stay strong for the foreseeable future. Like I said, today the total production is about 1 terawatt. The projection is to get to 4 terawatts. And if you just heard Elon Musk, right? The other day, he threw out a number which I fell on the floor listening to. He threw out 240 terawatts of battery capacity being required. I mean, I just dropped out of my chair. I was like, oh my God, where the heck are we going to get all the critical materials that are needed to service?
Right. Sounds like he wants to get into mining.
Tesla and Musk have been out there talking about getting into mining for quite some time. It was interesting because then you saw Exxon announce this week and they jumped into lithium mining, right? So there is interest, and you're going to see a lot of people enter into this space. Even if you take the conservative estimate, right, 4 terawatts, that is a 4x in the next 7 years, right? All of that is going to need lithium. Recycling and other options that are being developed will take time, right? And they will become a substantial portion of this. But even at 10-20% recycled material coming in, there is still so much demand for this lithium that these junior miners and them producing or exploration is going to be critical, right? It's going to be a mix of a lot of new resources to service. If you take the Albemarle's estimate that they gave around their last quarterly, they were talking about 2.5 to 3 million tons of lithium, with today about 1 million or so tons being produced. So even on a lithium front, you're looking at 3x more lithium being needed to be brought online. Now, if the technology moves to the next generation, the kind of lithium is going to switch, right? You're going to go to metal versus the salts, but you still need a source of the lithium, right? It's not going to go away. The miners will still have to produce the lithium. It is just you will tack on one more step of getting to that metal. There's nothing out there which will replace lithium in aviation, transportation, and now people are talking trucks. I forgot to mention those. These trucking going to battery, you need huge batteries there as well. We see a lot of electric buses that have come online, and the bus fleet is getting electrified. So I think in general there is a need. The one segment where I see a threat from alternate technologies in grid storage, right? Where you don't have to carry your weight around, you can have a heavier battery. So I feel sodium or some of those other batteries can have a play in grid storage. But from a mobility point of view, you need a lot more miners to come online, and bets in that space are definitely warranted. But I would also encourage people to look further downstream because it's coming, right? The next generation batteries are coming. And now is the time, because if you wait another 4-5 years, the valuations are going to go through, right? You basically, look, again, this is what I'll point out. Albemarle was $40 when, they acquired Rockwood, right? If you go back to 2014, Albemarle was a $40 stock. Look where they went. Yes, they have come down a little bit because things have moderated, but really they are a $300 stock, right? So do you want to get in when they are 40, or do you want to get in when they're 300 is the only question for all the next generation battery players, right? There are a few who are, a pitch for us, right? Is we are literally a penny stock, trading at 20-25 cents right now. But the potential for us when you scale up is so much more. So it's just not us. There are a few others in this space investors should really look at because of the value that they could. And it's a diversification play as well, right? As the technology moves downstream, and lithium-ion battery technology has tended to do that, it's a nice hedge that if you have a graphite play, you want a metal anode play as well. So you hedge your risk of, okay, graphite goes down, I have nothing in next generation technology, right? So I would encourage people to really research next generation batteries and not get discouraged when people say, oh, solid states are far out. It's not the case. These batteries are coming in the next 2-3 years. It's near term.
Wow, very exciting. I was just actually looking over, a friend asked me to have a look at something for them where there's snowmobiles that have been electrified. And again, a few years back, there was some concern about, battery technology performing in cold weather conditions. So I thought I better go on YouTube and go pull up this company and see if there's any reviews. And my gosh, again, a lot of the, diehard, enthusiasts that are, snowmobilers just absolutely love these things. So it shows the progress that battery technology has come in a pretty short period of time. So going to be interesting to see where you guys can take it. Maybe we could kind of discuss a bit. So you've talked a bit about, getting into some commercial production a few years down the road. You've got a pilot.
Actually, for us, commercial production is next year, right? So it's not even on the anode side. We are standing up a commercial machine right now. It's in design. I shouldn't say design. All the long lead items have been procured. We expect it to be commissioned second half of next year. We are working with 4-5 customers. Look, in the automotive industry, you go through A samples, B samples, and C samples, and then
Right.
D is the commercial samples. A lot of our customers are going from A to B samples next year, and they are already in conversations for C samples in 2025 and supply of the anode for those C samples in 2025. B sample is several million meter squares of this anode, right? So for us, that is commercial quantities that we have to supply our customers for their B samples itself. And they're talking to us about building anywhere between 15 to 20 machines, multiple customers together, right, to meet their needs for 2025, early 2026, right? So that's why I keep saying, you got to look at people like us a couple of years before the battery guy goes full scale, right? Because
Right.
the battery guy goes full scale when the auto guys gives him the approval. We go full scale when the battery guys has built his pilot, right? So they are building their pilots. There is enough of announcements out there which are talking about 5 to 10 gigawatts of next generation pilots being built in 25, which means as we supply those, we expect to really be busy and commercial. On the anode side, the metal will go commercial in 26, 27 timeframe, because you need a lot more of these machines operational. Each machine uses only about 10 tons of metal, right? So if you want 1,000-ton facility, you need at least 100 or so machines operational. So our plan is we will start designing when we have 25 machines operational, and from there we'll start the metal plant construction in time when we have substantial number of machines operational.
So for somebody that's not as well versed in the actual like sort of technology, you've got a couple of, it sounds like a couple of products. You've got your anode, a sort of thin film technology, and then you've got, and then you've talked a bit about lithium metal itself. Could you just differentiate for the layman's out there that don't know specifically? Could you just explain the products that
Sure.
you plan on being able to eventually produce?
Sure. So lithium metal is literally an ingot, right? So basically you take the lithium carbonate, you split the lithium carbonate into lithium metal and carbon dioxide gas with electricity. And then that metal is cast basically into an ingot. And that ingot is then thermally, basically you heat that ingot into a vapor and then deposit that vapor onto a film. Or what we call a substrate, right? The substrate can be one of many things depending on what the customer wants. The standard is copper. Copper is used as the current collector for anodes in the industry today. We have some customers, depending on what electrolyte they use, certain type of electrolytes eat copper away, so they prefer nickel or stainless steel as a substrate. Some customers like polymers, like plastic, which is metallized with copper. Or like imagine a bag of chips, right? You on the inside you have the bag, yes, plastic metallized with alumina, right? Yes. We deposit lithium on those. So we deposit lithium on a series of surfaces that the customer wants. Our know-how is how to vaporize the lithium and get a uniform deposit and get a large volume or large area of a substrate move through the machine, so we can really drop the cost of that anode. We have a third product. I wouldn't call it a product, but it's more of a service. As you provide these anodes to customers, there's a lot of scrap that is generated initially, right? Because they either the production on their end doesn't go well, there's certain restrictions for them. They today incinerate all that scrap, and valuable lithium and copper are lost to that incineration because it's considered a hazardous material. You can have fires. So what we have stood up is a 15-ton pilot to reprocess all that scrap back to copper and back to lithium metal. And then we use that metal in ingot form, right? Back end is the same because we have all the ingot production casting capabilities. We have stood up a facility where we can take those foils and convert them back into useful material rather than them going to an incinerator, right? So it is a service that we are providing. We thought it will be a small scale, but what we are realizing is there's a lot of scrap and people are paying money to get it incinerated. So it is a good problem to have that.
So I guess you'll be moving into like more of a revenue generating story rather than sort of like a science project where, again, you're developing new technology, you've built a pilot, you now can produce some products. Sounds like you'll be moving into the next phase, which is starting to generate, some bigger initial revenues. Is that correct?
Exactly. 24, because of the commissioning, we are not projecting. Right now, we are projecting moderate revenues of several $1 million. But 2025 will be a pivotal year where we really think our revenues should start going up substantially. It depends on our customers, right? Exact timing of their orders, but we could be cash flow positive in 26, 25 or 26, depending on the timing of and knowing battery industry, timelines tend to slip. There tends to be delays. So conservatively, we are projecting a 2026 profitability and free cash flow positive in 2026 and self-sustaining from there on. But we are hoping to pull that forward to 25. If everything goes well, we are hoping we'll be 2025 cash flow positive. But till then, we are doing one more. We are trying to do one more raise to fund all of this growth. Plus, government funding grants are where we are surviving till we get to that.
So maybe you could kind of speak on that. It sounds like you've been very successful in the government grants and funding. How much total money has the company received from the government to help fund these initiatives?
So far, it's small. It's a few $1 million from government funding, but we have two large projects which are on the books, which in terms of funding, but they have not been firmed up, right? We are in the last stages of those grants, and if we do receive them, it's a big validation, right? And I just want to throw something out to your audience as well. We recently got the Time Award for the best innovative technology, right? So we were listed for our metal and anode technology, which was another validation. The government funding is another validation because they do a whole lot of due diligence, right? It's not just them handing a check to anybody. And actually, we will be in February. There are a couple of entities, right? There's one called Engine, which is next generation batteries in Canada, which funded us this project for reprocessing. And we recently announced the successful ingot production. And so that was one of the government funded projects that's actually resulted in, it's going to result in revenue from next year. And they're projects that from a government funding, for them, it's great, right? They put money in and now there's jobs and revenue generation coming out of the government money from their viewpoint. So government funding has been critical for us to scale this, especially in this market.
Right. Well, thank you for giving us a breakdown on that. Are there any sort of significant partnerships or collaborations that you're currently involved with or planning in the future? Anything that you've publicly sort of stated? Don't get into anything that's forward-looking that you can't say, but that's obviously from a small company standpoint. The onus is always on the company to sort of prove that it's actually going to be a player in its given industry, and getting third-party endorsement from other larger companies is sort of key. Can you speak to any publicly disclosed partnerships or collabs that you have?
Sure. Look, we disclosed from the Canadian side, Blue Solutions as one of the major partners. They came into these government fundings as with contribution in kind as well, and we continue to work with them under a joint development and commercialization agreement. One of the other projects which I told you about, which is the casting project, today we are working with about 27 OEMs and battery manufacturers. All of them have our samples at different stages. Of those 27, about 5 of them are near commercial, right? Near pilot scale from their end. So for us, near commercial from our end. right? So they are getting into C sampling testing in 25, 26 timeframe. So we are progressing on that
Great.
front. But
And
most of these
how many of those I guess relationships would be revenue generating today?
A couple are larger quantity samples. So we sell thousands of meters every week in samples to several customers for their A sample testing, but those are small. I mean, thousands of meters today are only a few 100,000 a month kind of revenue generation, right? It's not
That's okay.
crazy revenue
Something,
generation, and our costs are
something
far more than that.
it's
Uh,
somewhere to
uh,
start. Somewhere to
yeah, it's
start.
a
It's
good
kind of,
start, but we really
yeah,
want to get into the million, tens of millions of revenue generation, not in tens of
sure.
thousands or hundreds of thousands, right? Because our costs associated with those revenue generation are still high. We have 6-7 million of burn rate in any given year, so we really need to drive that to into tens of millions to break even,
Great.
right, and get to free cash flow positive. Not cheap to do research. Let's put it that way. It is
Sure.
expensive to develop new products, but by 25 we expect at least 5 of those 27 players to be contributing substantial revenue to us.
Hey, excellent. Thank you for giving us such a a viewpoint into the business. Sounds like a really exciting time. Perfect time to be talking to you. I guess just to sort of switch gears a little bit onto like you, we'll just sort of like start to wrap up here. Thank you for going into so much detail. But what's a typical day look like for you now?
Look, typical day given where we are and are trying to fund our operations, most of the time is with investors, calls like podcasts like this, trying to sell our story, build awareness with our customers. That is where I spend a majority of my time. And then, of course, talking to customers to make sure all of their sampling needs are met. And, I wear two hats. I wear the chief commercial officer role at the same time as the chief executive officer, just because I've had the relationships from the Albemarle days, right? So we continue pushing our story, our products, our next generation products to these customers and investors. And of course, then there is all the other mundane stuff of making sure all the finances are right, all the things that need to get done are checked off, right? So we are listed company, so we have to report, we have to deal with all of the
Yes.
Canadian exchange requirements and reporting requirements. So there is always news announcements, publications, whatnot that we have to take care of. That does take a lot of executives' time.
Yeah, so it's pretty interesting to see where you've come from. Obviously, working with a major, pioneer kind of in the space, and having several roles with them over multiple years. Quite a juxtaposition, quite a change to go from that to CEO of a CSE listed company. What's that been like for you to do that transition? Has it been one you've really enjoyed, or has it been a bit of a surprise since you accepted the role?
Look, it's a mix, right? I mean, it is different in a sense that a lot of the things, I mean, you have to watch even small spend, right? Because you're so tight on cash. While there used to be a joke. I mean, I still remember this. I walked into my boss's office one day, and he said in Albemarle, and he said, "Hey, I'm very disappointed in you. Your travel budget is too low. It tells me you're not going and meeting your customers enough. I want you to be spending at least $2 million meeting all the key customers." And I'm here saying, "Hey, $5,000 is too much of a travel spend, right?" So you just got to be so much aware and be responsible for the investors' money, which puts a different dynamic, right? And you have to wear multiple hats, which is enjoyable. You learn a lot, which I would have never learned all these, right? I mean, looking at our financial disclosures, looking at a lot of things which you never do at a large company. You're so siloed, and you do your job and you go home. So learning wise, this has been great, but it comes with its own challenges, which are unique, right? That's what makes it pleasurable. That's what makes it fun. But I would never, if I were to go back 6 months when they asked me to come join. And with this insight, would I make a different decision? No, I would have made the same decision and continued, right?
Great.
The learning
Well,
is invaluable.
excellent. Well, I got to say before we sort of end, it's been an awesome episode here. Thanks for covering so much stuff, and it's been a great education for everybody. Maybe just before we leave, what are the top 3 reasons for somebody to consider investing in LI Metals right now, today?
Look, the number one in my mind, if I were putting my own money and I was looking at this company, it is because it is few years away, less than, I would say, a few months away, 18 months or so away from strong revenue generation. The market dynamics are super supportive. The market itself is moving towards metal. China killing this graphite actually got us a lot more attention. People are really looking at, hey, can I really move to metal and at the same time de-risk? And 3, the geopolitics and IRA is really is a tailwind for us as well, in that a lot of our customers are really looking to bring the supply chain into US, into North America or Europe. And us being one of the few metal players with a technology that can be deployed really differentiates us, right? So if somebody is looking into that next generation, looking to a company that they can get into for pennies on the dollar and then ride the way up, I would really look at LI Metal as one of the best options out there.
Hey, excellent. Why don't we end it there? Thank you so much for your time, Srini. It's been very educational, and thanks for sharing that with us. Thanks for giving us some time. We definitely want to have you on here as you guys continue to advance, and you can keep us updated. Anyways, thank you. Anything else before we wrap up?
No last thoughts, but thank you for having me. It was a pleasure. It was fun talking through the entire industry and